What's up, team? Welcome back to my YouTube channel, Kai Money, and today I'll be updating everyone on our YouTube portfolio, talk about a couple stocks that have been doing really well as really bad, and then go over some stocks that I have bought privately as well as some others that are currently on my radar. Now, before we get started, as always, this video is for entertainment purposes only, so please don't treat anything that I say or show as financial advice. Now, my entertainment sunglasses are already on. We already have our hatch profile located on the screen, so let's get right into the content. So, firstly off the bat, the current portfolio value is around $2,600, so we are up almost exactly $600 since the birth of this portfolio 2 months ago. That equates to around a 28% return, which is really good, at least by investment standards, my investment standards. Sorry if you guys have higher standards than me, but yeah, overall, slightly down compared to my last video recording, if I remember correctly. This is mainly due to one stock, Paysafe, which I will get into a bit more detail. They essentially fumbled the bag post earnings. It dropped 40% after we bought it, and that pretty much caused me to cash out straight away and reinvest it into another company. Spoiler alert, it was DraftKings, just because that one has also reached absolute buy zone, at least in my book, under $40. So yeah, let's scroll down to see how every position is doing. One notable thing is Playboy had popped excellently. That's the other stock that I will get into a bit more detail later on in the recording. So first off the boat is ChargePoint and Volta. I think slightly down since our last recording, and I feel like now is the right time to tell you all that I have cashed out my entire position privately. ChargePoint I sold at around a 45% return approximately, so similar to what return I would have got now. And Volta I sold at around a 73% return, for those that are curious. Obviously, if you invest in these companies, it's up to you if you feel like it's ran too fast and too hard, or whether it's just you're a long-term investor, you don't want to pay taxes, etc., so you just want to hold it and see how it plays out. I think both companies still have excellent outlooks moving forward. One catalyst that you might want to look out for is that ChargePoint does release their earnings shortly, and that might drive the price to go really high or really low, depending on how they do. Next up is another highlight, Playboy, up now 73%, which is around more than 40 or 50% compared to our last recording. I will get into more detail about this stock on PowerPoint, so yeah, we'll go over that a bit later. SoFi is now up around 50%, which is absolutely excellent as well. It did recently drop. I'm sure you guys would have done your own research on it, but it's not a biggie, and if you're long-term like I am, just a small bump in the road. Cleveland Cliffs has dropped quite a bit. It has been on the decline since we got into it. At one point, I remember this was up around 20 to 30%. But another one of our long-term investments, I don't own this one privately, but I will consider buying in at around 20 US dollars. Sorry, I just realized everything is still in New Zealand dollars, and I like referencing my stuff in USD. So yeah, where were we? So Cleveland Cliffs, we got under $20, and that is the only price that I will consider rebuying it. So yeah, privately I don't own any of it. Lending Club is actually one that I bought more of at around $39 to $40-ish, at least privately. We got it at an excellent deal privately, around $31 pre-earnings, and that definitely paid off, unlike Paysafe. If you guys remember in our last recording, Paysafe and PayPal were the two new stocks that got added in. PayPal, maybe I should have waited another 1 or 2 days, because I think if I remember correctly, literally the next day or two, this dropped to around $211, which made it a really great buy zone, and that's absolutely what I did privately. I also bought PayPal at a similar price to this public portfolio, but when it did drop to around 211, I increased my position, nibbled on it a bit more, and that pretty much means I'm break even, at least in my private portfolio. Still a bit down in our public one, but I'm not too fussed on it. DraftKings, so that's a stock that has been getting absolutely hammered. I'm still really bullish on the gambling industry as a whole. I feel like Wall Street is still sleeping on the industry, and I look forward to good things at least in 2022. So I chucked everything in Paysafe that we had in Paysafe and chucked it all in DraftKings. So now we got a nice clean number of holdings as well, 10, and I feel like we'll keep this number until at least the end of this year, moving to next year, where we decide maybe if it's time to cash out maybe everything and restart again, or maybe just build on this portfolio further. If you have any thoughts on this, let me know in the comments below, because I guess ultimately this portfolio is relatively low risk for me. It's kind of something just for fun, so I'm open to any ideas on what we should do with it. I even thought about just cashing some of it out, or like selling our worst performing stock and donating it to charity for Christmas or something like that. So yeah, absolutely open to ideas. The last two is Neo. Neo has just been trading horizontally at around the 38 to 42, $43 region. I don't expect this to have any much of a pop or a drop until Neo Day comes up, which is in mid-December. Sorry, I'm really out of the loop with Neo. I feel like I've just been bag holding for a very long time now. I'm still quite bullish on EV as well as the company, but we shall see. And Citigroup has pretty much just been trading flat. So that is your update on the public portfolio. I will now get into PowerPoint and talk a little bit about paysafe as well as a little bit about Playboy, our worst performing stock and our best performing stock. Well, former stock because we sold paysafe. And then I'll go over some stocks that's currently on my radar as well as some stocks that have been bought. So yeah, I will see you on PowerPoint. Ciao. Alrighty, so we are now on PowerPoint, and I thought I'd first start this video by talking about paysafe as well as how they fumbled the bag so badly. So on my right hand side, I have a screenshot of the third quarter financial highlights, and on my left hand side, I have the analyst predictions prior to them releasing their earnings. So long story short, they did miss really heavily on earnings. That caused them to change their guidance as well as forward outlook, pretty much downgrading all their numbers. And one big red flag for me was this statistic right here, the decrease in 1%. As a growth company, you are expected to grow quarter on quarter, year on year. So when you self-proclaim yourself, or not, actually not self-proclaim, but when you are a growth stock and you see a decrease in earnings and revenue, that is a really red flag and a really bad sign, at least for me as an investor. So obviously that caused it to tank and made our prediction as well as Wall Street's prediction wrong. Sometimes you win and sometimes you learn. So this was a learning lesson for all of us. And yeah, as quickly as stocks could rise, just as fast as they could crash, although paysafe was on the decline pretty much this entire year. Privately, I also bought in at a similar price and took a similar L, but one thing that I did differently was on the day that they released these earnings, it did crash significantly, and what I did was I actually loaded up on more stocks. I loaded it up on more stocks just to bring my cost basis down, and then on the next day when it ran up around 3 to 4%, that's when I sold again and then reaped in and recovered some of the losses that I've made. So obviously I don't recommend this as an investment strategy or a trading strategy. It was just something that, because paysafe was a relatively small position in my portfolio, I was willing to risk doing what I did just so I can maybe recuperate some of the losses. Now, moving on to Playboy, which is the highlight of our video, up around 66% on the month, as you guys can see here on my screen, and up around 70% publicly as well as privately for us. Their earnings call was very insightful, as well as connected some dots that I was not too sure on around Centerfold, which is their platform that is going to compete with OnlyFans. Now, I do have a screenshot here of a private Instagram post that I made a while back, 8th of October, where pretty much Playboy was at its all-time low since its IPO. Maybe not all-time lows, but pretty much at its low since its IPO. So I made this call a while back, and I'm sure you guys know who that is, and or maybe not everyone, but some people, as well as mature adults. We could all be mature adults here. Some people can know who that is, and yeah, there's a lot more other content creators as well as influencers that are partnered up with Centerfold upon launch. So I'm very bullish on Playboy. So although they had really good earnings, it was their growth avenues for the business that actually shined the light for at least myself. Beyond Centerfold, they have their Rabbitite NFTs, which pretty much sold out instantly and have raked more than $8 million US on initial sale, and then another $8 million just on royalties of resale. Also, 2/3 of their e-commerce consumers were actually 34 years old and younger. So that means that their product is pretty much arguably still pretty appealing to the younger generations and isn't really like a boomer company or a boomer stock. And yeah, I still think some of their stuff are pretty cool. I mean, I don't own a lot of Playboy stuff, or if any at all, but I don't know, that rabbit looks pretty scucks on a nice hoodie and stuff like that. So Playboy, if you do have any shareholder discounts, please let me know. Please hit me up. I do own a very small portion in your really large company, and it will be good if I get some deals, maybe even on some other more mature content, if you know what I mean. Nah, just kidding. But yeah, their earnings, they did say their revenue was up around 60% year over year, as well as taking on and absorbing all the impacts that COVID presented. And also with all the hype around Metaverse, Playboy will also do its part by having in-person as well as virtual parties online. So yeah, heaps of avenues going forward for really good growth, all of them being excellent opportunities, at least for me, which is why I am actually still extremely bullish on Playboy. Yeah, smash earnings and forward outlook got me excited. I loaded up heavy in early October, and I feel like you haven't missed the boat yet. You might want to wait for a cool off or a pullback, although I'm not sure if it will actually happen, or maybe this will continue on its bull run and make all of us investors that are already in really, really happy. Yeah, like I said, privately, I don't plan on cashing out. At least it makes a really ridiculous run up, which I feel like will just go back down, which I will definitely buy more. But yeah, if it does run up a lot more than what it is right now, I will cash out and then re-enter it again, hoping that it does drop a bit. Fingers crossed for that. Actually, not fingers crossed. Fingers crossed it just keeps going up, so we could all be very, very rich. So yeah, that is quite a brief summary of Playboy. I am kind of winging this. I do have a little bit of notes, but yeah, if you do want to read the financial reports, earnings reports, forward outlook, I'm sure you guys can do that in your own time. So I thought I'd close off this video with some stocks that are on my radar and what I have been buying privately. Here's just a bullet point list. I have been taking advantage on some dips these days by nibbling in and not going all out though. Some of these companies I feel like will do excellent in the mid and long term. I'm not, for most of these on this list here, I don't intend on swing trading or anything like that. It's more of a buy and hold and see how it goes. So, yeah, I thought I'd first kick things off with Activision, which I nibbled in this morning. The stock is is quite a valuable company. Sorry, it's getting really late. I'm getting a bit tired, so please forgive me if I do make a lot of mistakes. It has been a long day. So yeah, as you guys can see, it has been getting really, really beaten up, and I will consider adding more in as it continues to tank. Activision has been in the heat recently with quite a lot of news regarding misconduct, as well as them delaying pretty much releases on some of the games they had in store. Crowdstrike also had another dip, small dip around 10%, and at that 10% I did load up a little bit on. I don't intend on loading up anymore unless it reaches the support level, this blue line that I have drawn over here. But I felt like at this price it's a nice entry to go in from its minor pullback, and it might ride up going forward. We'll never know. But if I was to enter more in, I will have to wait for the support level. Yeah, it has bounced around 44% though since the time I bought it, which is pretty all good. And next up we have Celsius. This is an energy drink company, and they also released earnings. They weren't really good. It was quite a mixed earnings report from at least what I interpreted. Celsius is still a relatively new company, at least in my books, although it has ran up quite a bit in the past 6 months alone. I actually got this stock based off another YouTuber, which I actually really like. I won't drop his name just yet until just in case this bites me in the back. But all in all, another company that I feel like it's worth establishing a position in for the long term. I will buy more if it drops further from this level, just FYI. Other notable recent purchases that I have been making include PayPal as well as Intel, and I also extended my position in Lending Club because I am also quite bullish on that company. With Tesla, we are aware that Elon is in the midst of selling, but for me personally, I feel like there are better opportunities out there, and I pretty much won't even add Tesla to my watch list unless it drops to below $850, and I won't even consider buying a single share until it is in the $700 range. So, alternative to Tesla though, I did buy GGPI. As you can see, it has had a nice run recently. I did not get in at this bottom, unfortunately. It was on my watch list for so long, but yeah, I missed the boat on this one. I got in at around this price here. It's really hard to gauge, but around $14, so that's here. You may say you have missed the boat, and I might have FOMO'd a little bit here, but really small position, and I'm just in it for the ride up. You could see Rivian has been just absolutely killing it. I did not get in on that, so props to anyone who did, as well as Lucid as well. Both of those stocks have just been absolutely soaring. So yeah, alternative to Tesla, I got into Polestar, which is, right now it's still a SPAC, but yeah. And finally, also Marqeta, it has dropped to a nice level over here for me to consider position in. It can drop further to the support level, which I will probably load up on, but this is a nice price also to nibble in. So, some other stocks that I have bought that I'm not going to go into any more detail than I already have include Callaway Golf, DraftKings, and Zora. DraftKings dropped below $40, which is a really great buy zone for me at least. So I've invested in all three of these companies privately and for the long term. And other notable stocks on my radar for you guys to do your own due diligence in your own time include Unity, QuantumScape, and Disney. Apologies if this video came out really shabby. This is only my second time recording it. Like normally I have like 3 or 4 takes, but this time it's late, I'm tired, 2 takes is enough. So yeah, hopefully you guys got a little bit more insight into the market as well as what potential stocks that you might want to invest in. And that is all I had for today's video. If you enjoyed the content, please comment, like, and subscribe. I do have some referral links down below. And now my entertainment shades will be off. So I'll see you guys in my next video. Peace out.